My name's Laura Reinholz. I'm the Director of BMO for Women, and I'll be your moderator for today. I'd like to start by introducing our experts on the panel. Leslie Marks, Chief Investment Strategist, BMO Private Wealth Canada. John Paniccia, Vice President, National Director of Business Advisory and Succession Planning, BMO Wealth Management. John Waters, Vice President, Director of Tax Consulting Services, BMO Wealth Management and Advisory Services. A big thank you to each of you for making yourselves available for this session. I'll be asking each panelist questions that were submitted to you by our webinar registrants. Each panelist will answer questions for approximately 20 minutes, and then I'll shift to the next panelist. As we had many questions submitted for this webinar, we apologize that we'll not get to all of them. We've chosen to answer the most pressing and the most common questions submitted. I'll start with questions for Leslie Marks. Leslie, what's the outlook for the economy, and how can we help organizations and small businesses cope?
Thank you, Laura, and good afternoon, everybody. Well, not surprisingly, we think the next 1 to 2 quarters will be devastating for the economy, and frankly, like nothing that we've ever seen before. Our economists at BMO have been adjusting their forecasts on a weekly basis because of the lack of visibility of current social distancing measures. The key for small businesses to cope will come from governments and central bankers. The central bankers will continue to keep interest rates low to maintain lower financing costs for borrowers. Governments can also provide fiscal support through various relief packages. In Canada, some of the already announced initiatives include fiscal support in the range of $52 billion already announced and more to come. Wage subsidies of 75% were increased from the original 10% proposal. Policymakers have indicated that they will do whatever it takes to support the economy through this extremely difficult period, and thus why I think more announcements are likely. The banks in Canada have affirmed their commitment to working with customers to provide flexible solutions on a case-by-case basis for managing through these hardships that will be caused by recent developments. I would encourage you, those listening today, to visit bmo.com for the most up-to-date information and to see the full extent of the programs in place. But some examples include BMO is introducing a financial relief program to help small businesses directly impacted by COVID-19. The financial relief program includes deferral of payment on small business loans for up to 6 months, credit cards, and credit lines. We're also increasing limits on our small business operating lines to help with short-term working capital. That's really the summary of the major factors here.
Do you think that this will put us into a long-term recession?
Well, I think, Laura, let's first look at how a typical recession would happen. In a normal business cycle, there would be an excess somewhere in the system that would be providing inflationary pressure that would cause central bankers to increase interest rates to keep inflation in check. Remember, if you want, if you can, that there was life before this period, and this was not the case. Economies globally were experiencing the Goldilocks conditions of slow to moderate growth with very little inflation and strong employment. And central bankers were actually easing around the world. Then we had this virus come along, which required major efforts to flatten the curve in number of cases. These efforts included social distancing, shelter in place, and lockdowns. So this has really been a self-induced economic recession to fight the pandemic. Those extreme measures are going to cause a massive downturn in growth in Q2, as I mentioned, and potentially Q3. But when those extreme measures come off, we expect to see a large bounce in the major economies, in Canada in particular. It may take a few quarters, but it will happen. We will get to the other side of this. We're closely watching China to see how their economy responds to their restart. Now, of course, not directly comparable, because you would be comparing a society under communist rule versus a democratic society. But there have been some who have suggested that people will be chomping at the bit to re-enter into society, to dine out, to go to bars, to spend money on retail. I personally am a little bit more cautious on this front. I've heard reports of recovery levels in China being very slow when it comes to comparing current levels to pre-COVID levels. And just think about yourself. How quickly will you want to attend a restaurant, a bar, or a shop, especially if there is reduced visibility in your own employment situation or the future of your business?
So the world economy has been impacted. Where do you predict that Canada will end up short and long term?
Well, for better or for worse, there are two key determinants for the Canadian economy. The first being the outlook for oil, and the second being the performance of the US economy. Energy is estimated to represent about 10% of our economy, and estimates are already in place for about a 20% reduction in capital expenditures for the sector based on the current price environment. So it gives you a sense of the very negative impact on our economy from energy. But as we all know, the only cure for low prices is low prices. So with production and investment curtailments, oil supply will eventually shrink. And with a global economic recovery on the horizon at some point, demand will also pick up. So as negative as oil is on the downside for the Canadian economy, it will also contribute to a bigger recovery on the upside. Now, longer term, our economic reliance on fossil fuels is something that needs to be addressed as climate change and sustainability has moved firmly into the mainstream investing world. When it comes to the US economy, we are clearly intertwined with the performance of their economy. 20% of Canada's GDP comes from exports to the United States, but US policymakers like Canada have shown leadership to do whatever it takes to bridge the environment right now towards recovery. With over $2 trillion already announced in fiscal support, not even fiscal stimulus, fiscal support, and a central bank that is really acting as a lender of last resort, we are confident that our neighbors to the south, once they get their number of cases under control with respect to the virus, will resume economic growth, and we as Canadians will benefit.
How fast do you think that the economy will bounce back after all of that?
The economy could bounce back quickly once the current social distancing measures in place are lifted. As I mentioned earlier, we are closely watching what is happening in China for two reasons. One, just not just to see how people are coming back into the economy. As we've seen so far, it's been fairly slow, but also for a potential spike in cases, or that second wave that people have talked about in number of viruses. Now, we have seen some encouraging data, although things have been moving slowly. Our first data point on China's economy post-lockdown was their what's called the Purchasing Managers Index, which is a strong indicator of future economic growth. And the other day, Monday, we saw a very strong level above 50, which indicates potential for expansion. One might point to this number as a strong indication that we'll see a V-shaped recovery in China, but we do have to remember that China was the first epicenter of the virus, and now the Chinese economy will be subject to the slowdown in the rest of the world. So, for example, the most recent retail sales number we saw out of Hong Kong is down 44%, and we would expect the European and North American retail sales numbers to be similar, as we've seen very quick reduction in consumer confidence. So while our hope would be that the economy will bounce back fast, our impression is that things will start off slow for 1 to 2 quarters as people start to become accustomed to being out into the world in a regular fashion, and then accelerate quickly.
Thank you. We've seen the dollar go down a bit over the last month. How low do you expect it to go, and how quickly do you think it will come back?
Well, yes, the past year and a half for the Canadian dollar has actually been quite good. The Canadian dollar has held up well in the face of generally a strong US dollar, because our central bank was slightly more hawkish than the Fed. They did not show a willingness to cut interest rates at the same time that the Fed was cutting. But now, as we all know, our central bank has completely synchronized with the Fed, and so central bank policy is no longer driving the performance of the Canadian dollar. What is driving the Canadian dollar is back to the price of oil. Higher oil prices will help to boost the Canadian dollar, and also a positive view towards risk on will also help because the US currency, the US dollar, is viewed as a flight to safety currency. So when you see equities moving higher, that's what we would describe as a risk on environment. We would expect the Canadian dollar to also move higher. It's hard to say exactly what the floor will be for the dollar, but if volatility remains in equities, our economists are forecasting a 67-cent Canadian dollar. Now, we do expect equities, I know the question wasn't about equities, but we do expect equities to bottom when the number of virus cases peaks. So it's important to watch the trajectory of the virus cases, particularly in the US, which is now firmly the epicenter of COVID.
So you did mention interest rates earlier. How can we expect them to be further impacted?
Well, with interest rates essentially at the lower bound for both the Fed and the Bank of Canada, we're not forecasting any more rate moves for the rest of this year from our central bank. Bank of Canada Governor Apollos was very clear. He did not see Canada moving to negative interest rates as others have done in the rest of the world. But one caveat is Governor Apollos' term is also up in June, so this may be subject to change with a new Bank of Canada governor. Longer term rates could move lower, though, through the quantitative easing measures, which basically are the purchase by the central bank of government bonds. This has a dampening impact on interest rates as demand for our bonds purchases by the central bank will push prices up and yields lower. So shorter term rates, we don't see a huge change, but we do see potential for longer term rates to continue to move lower.
Thank you. So this is actually my last question for you, Leslie. Why do you think, according to Catalyst, that women will be hit harder after this in the workforce?
Yes, I
Loaded
saw
question.
this. Yeah, I saw this article, and I have seen others like it, which talk about the environment in downturns and women generally getting hit harder in a downturn or in a layoff scenario. And I think the source is really related to the Catalyst article was related to the roles that women tend to have in various operations or businesses, and that those tend to be the ones that will be cut or budgets are cut first. And so I think that that is probably fair, and it's data based, and those types of roles would be things like on the marketing side, or you know, those would be thought of as more discretionary expenses for a business, and they're usually the first things to cut. So I think that's what the Catalyst article was pointing to, and just also probably bringing awareness around the progress at a slow pace, but there is progress around bringing up that gender diversity aspect for companies, and that they should be really mindful in moments like this where they shouldn't end up moving themselves kind of one step forward and two steps back as a result of cost cutting or restructuring. So I think it was a bit of a call to action as well for companies to be mindful when they're looking at the areas to cut and how that impacts women.
Thank you for your insights and information, Leslie. I'll now move on to John Paniccia. John, what does the downturn mean from a valuation perspective, and what impact have you seen on merger and acquisition activity?
Thank you, Laura, and good afternoon, everyone. I lead a group of business advisory and succession plannings within BMO Wealth. And at first principles, valuation is a function of achieving future cash flows. Obviously, most businesses have been affected in one way or another, and it's been a downward pressure on valuations. We've seen that in the public markets, and we see it with our private companies as well. It's too early to really determine how long this will affect businesses and how long it will take business to bounce back. It will be a function of the length of the economic shutdown. That being said, what we're seeing in the marketplace working with clients is some activity. I actually have been approached last week by 2 clients that are in live deals, and a third one that was approached by a US company to acquire them. We're still seeing that activity, but on the other hand, similar to the financial crisis, we're seeing examples like the one I'll give you. So we have an HVAC company that services condos in the GTA. The seller and the purchase price consideration was based on an earnout. So that being a portion upfront in cash, the remainder being paid out upon certain levels of income being earned in the future. With the uncertainty in the marketplace, it's very difficult to ascertain what that hurdle should be. On the buyer side, in this particular transaction, the buyer was contemplating certain financing that was no longer available. So we're seeing certain deals come to a pause given the uncertainty, but there is still activity. In terms of well-capitalized companies, we are seeing, when things start moving back to a normal state, buying opportunities for equipment or other businesses that they can utilize. The PE firms are sitting on large capital. There's a private equity firm in Toronto that launched a fund and was able to raise significant funds in this environment. So overall, we are seeing a pause given the uncertainty. Not all activity is dead. And if you're in the process of selling or preparing your company for sale, obviously it's a process, not an event, and there's a lot of items to be addressed. We strongly advise that you continue to do so that you're ready when the markets bounce back.
And what are the available bank programs to help business owners during this time?
So we've been working, I work within the Wealth Group and together with our business banking platform, we work collectively together. There's been, the speed and extent of the downturn has been significant, but also the response both from BMO as well as the policy response has been unprecedented as well. From a business banking perspective, there are certain criteria that need to be met, and we encourage individuals to contact their relationship manager to inquire more about this. But at a very high level, there's increased operating lines for small businesses, allowing them to make funds to achieve payroll, deferral of certain payments on loans, credit cards, and credit lines for Canadian small businesses, some tailored relief for our larger commercial clients that could include access to extra working capital, and for medium-sized businesses, one-on-one advice on options to maintain their liquidity. So that's from the lending standpoint. From the wealth planning and advisory group, we've been responsive and agile for our clients. We do prepare a wealth plan exercise for our clients, which includes specialty planners, including the group that I lead, tax planning consultants, will and estate consultants, and insurance advisors. And we've shifted our focus to what would be of immediate concern to clients today in the current environment. So from a business advisory perspective, that will include cash flow management, expense management, financial forecasting, capital structure optimization, operational efficiencies, and working capital management. So previously where, we've been dealing with transfer of family of businesses from one generation to the next, or M&A activity, we're shifting the focus here given the uncertainty and the impact on individuals' businesses. From a tax perspective, there's also strategies given the downturn that we've been focusing with our clients on. Will and estates, it's always important to ensure that your powers of attorney and so forth are up to date. And from our wealth plan perspective, we're looking at the broader goals of individuals together with their businesses. We've come up with sensitized models to show the impact of under different scenarios, and also inclusive of our life insurance strategies and considerations.
So I know cash flow is a big topic and was on Monday with our last webinar. What tips can you provide in managing cash flow, including working capital and other expenditures?
Yes, so managing cash flow is always important, but it's obviously more important during the COVID crisis. I think at this point, companies are getting a lot more granular in terms of what they're doing, and the frequency as well, where you'd be looking at it more long-term or not as often. You're revisiting this daily. Some strategies to free up cash through working capital management. The first point, and this is a key point, is really to think about your relationships with customers and suppliers, and talk to your customers and suppliers and understand their own struggles and experiences. This is going to go a long way. We're all in this together, and the entire supply chain is affected. And what we want to do here is gain a better understanding, let's say on the supply side, as to whether there will be any issues on future supply. And if so, can you find product elsewhere? On the customer side, understanding customer forecasts will help you forecast as well. So it's very important to connect and maintain this dialogue on both sides and maintain these relationships so that you can understand what your position looks like. On the accounts receivable side, could you discuss faster payment from customers? Ensuring that invoices are sent in a timely manner and followed up on. You're also looking at how clients are managing their credit terms with customers during this time, and trying to assess what you think about the financial health of your client as we undergo this period of downturn. On the accounts payable side, obviously looking at room to extend payables with a key supplier. The key point there is you definitely want to be careful on stretching payment terms with suppliers. It can have a negative impact on the quality of service, impacting your inventory levels, and thus the quality of service that you end up providing your clients. On the inventory side, when we're focusing on working capital, obviously addressing slow-moving, obsolete stock. Is there a market to turn this stock into cash flow in the short term? Also, do you have a good understanding on individual product profitability? This can help avoid tying up cash in unproductive inventory. With respect to expenditures, and again, at this time, companies that we're working with and clients that we're working with are focusing many efforts on this daily, and looking at, taking a detailed review of your total monthly expenditures and what is absolutely required now versus what can be removed or pared back.
Thanks, John. And this is the last question I have for you. As a leader, what are the best practices or focus areas as it relates to my business, internal and external stakeholders during this time?
I thought of this question in depth, and I've organized it in different categories. And the first one would be dialogue. And I alluded to that in the previous responses, but continue to communicate and share, that being internally and externally. Staying close to your supply chain, and clients as well as suppliers will remember this relationship. It helps build relationships, and they'll see who was there when. When focusing on yourself, you're looking at client and pipeline management, using this information to understand really where the business is going and what can be done to improve things. One question that had come up from a number of clients was respect to contractual obligations. And, certain clients have a minimum quantity to purchase, certain clients have a minimum product to deliver in its simplest form. And often there's clauses for disruption. So we've encouraged individuals to look at those clauses and determine whether those do apply. Obviously, when something like that would occur, you'd still have the dialogue and so forth with the other party to ensure that everyone's on the same page and not just not perform, if you want to call it that. The third one is really very important, actually, is being responsive, and including, being agile and evolving and finding different ways to service clients during this time. As a very simplistic example, there's a large change of fitness centers that have closed their doors due to isolation and so forth. They've used social media to stay connected with clients and have fitness classes on Instagram and so forth. And they're finding a way to stay connected and service these clients during this time. So it's really important to respond and see how you can service your clients and develop a plan with actions that can help you in that respect. If we break it down, this is my fourth key point, and say, okay, well, what should we do immediately, and what should we do as we monitor the recovery? Immediately, and I've alluded on some of these, but I've bulleted them out, just trying to put in a framework for myself, is implement effective cash management projection models. Secondly, revise operational models and identify any vulnerabilities. Implement cost reduction and creative revenue generating opportunities, maximizing working capital. And the last one is proactively communicate with all stakeholder groups. And that includes employees and ensuring their health and well-being, but also developing game plans and having a leadership team that can take a look at different ways to approach the market, or different ways that you can have relevance during this time. As we move into the recovery, obviously the first one, monitoring cash flows, is a consistent and taking a look at variances and continually refining those models. Defining effective KPIs to monitor and track operational performance. A key one, again, relates to that communication piece, is to negotiate with stakeholders. This will help ensure long-term viability. And importantly, establish a plan for returning to optimal operational capacity when things pick up. Overall, I'll close with this piece being, it's important to remain positive, ensure and work on things that you can't control, ensure the well-being of yourself, your staff, while you support your clients in different ways. I'm confident that the recovery will be forceful when the health crisis is past us, and truly believe that those that are creative will lead to creative ways of doing business and meeting the needs of clients well into the future.
Thanks, John. I'll switch gears now and pose questions to John Waters. John, what tax help has been offered via the federal government to small business owners?
Well, thanks, Laura. Yeah, there's been quite a number of relief programs that have been introduced over the last coming weeks. And in today's call, I'm just going to focus primarily on the federal relief, but I do want to acknowledge that there has been significant provincial support as well. But as this is a Canada-wide call, and just in the interest of time, I'll just focus specifically on the federal relief. Just before I get into the support specifically for businesses, I just wanted to briefly mention the support for individuals. I mean, at the end of the day, we're business owners, but we're also individuals. So just sort of a list of some things that have been provided for individuals would be an increase in the GST credit, increase in the Canada Child Benefit, the delay of personal tax filing deadlines and personal tax payments as well, quicker access to EI, and the new Canada Emergency Response Benefit, which provides up to $2,000 per month for 4 months. I understand that should be available as early as April 6th, next week. There's always also some mortgage support, the decrease in the RIF minimums by 25% for 2020, and a delay on student loan repayments for 6 months. As it relates specifically to businesses, I'll just go through. There's a number of incentives that have been provided. The first one I'll talk about, and this has been alluded to by some of my colleagues, is the access to credit. So there's a business credit availability program that is providing $65 billion of credit solutions through the Business Development Bank and the Export Development Canada. That includes the interest-free loans of up to $40,000 for small businesses or nonprofits that had a payroll of greater than $50,000 and up to $1 million in 2019. That's provided through your bank. I would also mention, as my colleagues have as well, that for BMO clients, small business clients, there is a possible 6-month deferral on mortgages, loans, and lines of credit, and additional credit being extended on operating lines. So be sure to reach out to your business banking relationship manager at BMO. They're certainly well prepared for these conversations. I would also mention the wage subsidy program. This is something that was introduced a couple of weeks ago and is being enhanced. And I believe the finance minister is speaking later on today about the enhancements that was originally announced a couple of weeks ago. And then the enhancements were alluded to last week. And then we've been expecting more details. And I understand that those are to come this afternoon. But this program is going to provide 75% wage subsidies for up to 3 months for up to $58,700 of income for each employee. It's retroactive to March 15th. It's for companies of any size, including NPOs and charities that have experienced a decline in revenue by at least 30%. And I understand from listening to the Prime Minister speak earlier today that these applications should soon be available on the CRA website. The expectation is that employers would pay the remainder, the 25% that is not subsidized, and that if an employee is receiving a wage subsidy, they cannot also receive the Canada Emergency Response Benefit, the $2,000 per month that I spoke about a minute ago. So more to come on that. This is something that has up from 10% was announced initially up to 75%. And there was actually some legislation that was drafted and received royal assent last week regarding that earlier subsidy. And at that point, the subsidy was to be applied versus payroll remittances to CRA, but it's not clear yet how the enhanced subsidy will be provided. So more to come, and certainly pay attention to CRA and Department of Finance releases on that. I would also mention that there's, with regards to employee insurance, there's the expanded duration of the EI work sharing program from 38 to 76 weeks. This program is intended to avoid layoffs by providing income support to EI eligible employees who temporarily reduce their work week during a downturn. The Bank of Canada has also acted as well in decreasing interest rates and increasing steps to increase the liquidity to banks and other mortgage lenders. And I'll just allude to some tax flexibility and deferral, which I'll go to in more detail in a second.
Thanks, John. Yeah, the next question being, are there any taxes I can avoid or push off paying right now?
Yeah, so with that, as I mentioned, there was the reference to the individual changes in delaying of filing of tax returns and to delaying the payment of taxes. And of course, similarly, there are some other relief that's being provided for businesses. So there's some flexibility being offered. All businesses can defer their payment until September 1st of any income tax amounts that are owing after March 18th. To up to September 2020. So for many businesses, say an incorporated business, say with a December year end, they might otherwise have had some filings due at the end of March. Payment of the final tax installments, of course, that would be deferred now to September 1st. And this includes tax balances, as I mentioned, that are due now or installments that would have to be made. I'll state that this only includes tax under Part 1, and what that means is basically that the basic income tax, but things like refundable tax on investment income for companies that might have investment income, that has not been changed, is not part of that relief. It's also not extended to payroll remittances, of course, subject to the wage subsidy that I mentioned earlier. The filing has also been extended in some cases for businesses. For those individuals that may be self-employed, not incorporated, but operating their own business as self-employed, they, of course, would normally have to pay their taxes by April 30th and file their tax returns by June 15th. What's happening now is that the tax return is still June 15th as it stands today. But the payment that would otherwise, the estimated payment that would otherwise be due on April 30th has also been extended to September 1st, and that would include any June 15th quarterly installments that would otherwise apply. For a corporation, normally, again, you'd have to file the tax return 6 months after the end of the corporate year end. For a company with a December 31st year end, they, of course, would have to file by June 30th. As it stands today, that return date is still unchanged, so still at June 30th. But for other businesses that may have had a deadline to file between March 18th and June 1st, that's been extended to June 1st. So an example might be a company that has an October 31st year end. 6 months after would be April 30th. That deadline has been extended now to June 1st. I would also mention that all businesses, including those self-employed, can now defer any GST or HST remittance payments and customs duties on imports until June 30th. Any charities are now able to defer the filing of their charity information return to December 31st, 2020. That was due between March 18th and December 31st. CRA is also suspending audit activities and collection procedures. And I would just mention for those business owners that may have a family trust, often typically with the December 31st year end, of course, there is a deadline that just passed earlier this week of March 30th to file those trust returns. That has been extended to May 1st, and any taxes that would be owing on that return would also be extended to September 1st.
So, John, we've actually had a couple of questions come in on the chat line specifically for you. So, and looking at the time, we do have the time to address a couple of them. So if you don't mind my asking them, I'll just ask you to, if you can answer them. So based on your first question, when you were talking about the help being offered by the government, the question was, is this based on total annual revenue? How are we able to prove the 30%? We had several jobs canceled but didn't have the POs or statements of work issued yet.
Yeah, I don't have the answers to that. Laura, as I mentioned earlier in the call, the details are coming this afternoon. Literally as we speak this afternoon, the Minister of Finance is talking, as I understand it, is giving more details on the wage subsidy program. So the details around that 30% and the criteria to meet that are still unknown to me, but those should be available very shortly.
Okay, and going to the second question on the taxes to avoid or push off paying, there was a question about deferral of property taxes.
Yeah, again, that's more, that's going to be provincial based. I know I have heard some provinces talk about that, but it's not a federal issue. So I don't have the details for all the provinces across the country, but I know that some have some leniency there. So best to check with your provincial government for details on those.
Okay, perfect. Thank you. Going back into our regularly scheduled program questions, do you expect the government to offer more tax breaks down the road?
Yeah, the answer is it's quite possible, and I think Leslie, you kind of alluded to this as well, and really it's depending on the extent of this health crisis and the freeze on the economic activity that we're in currently, and how long that extends. The government may have some other tools in its arsenal to put forth. I think of the wage subsidy that was originally a couple of weeks ago announced at 10% is now up to 75%. So that's an example of sort of the government reacting to the state that we're in. I know other organizations out there, I think of the Canadian Federation of Independent Businesses, have put a number of wish list requests out there and things like tax forgiveness instead of tax deferral and higher wage subsidies beyond 75% or immediate EI access to work sharing. Those types of things have been bandied about. Relief for rent and utilities and property taxes, that question mentioned, and grants versus loans are some other ideas that have been bandied about by various business organizations. So, I mean, all of these are potentially at the government's disposal, but as I say, it's more of a wait and see, and depending on how long this crisis continues.
And do you expect the government to provide assistance to certain industries over others?
I wouldn't necessarily assistance over one over the other. I think at this stage we've seen a lot of widespread relief being offered sort of across the board. If anything, there may be some additional measures beyond those that are offered to specific industries that are really feeling the burden of this economic freeze and this health crisis. Obviously, there's been a lot of talk about certain industries like the airline industry and oil and gas, as maybe the government might opt to support them specifically. I know for farmers, there's been an additional $5 billion support that's been offered to Farm Credit Canada. But I think of many other industries like those, perhaps many on the line, and industries such as hospitality or tourism, arts, retail, or personal services. It's quite possible, depending on the length of the shutdown to the economy, that there could be more specifically targeted relief coming.
Thanks. And John, our final question for you today is, can you recommend other tax planning strategies in these challenging times?
Yes. So as John, my colleague John had alluded to earlier, I mean, similar to him and his group, we've been reaching out and being very proactive with our clients, and just trying to talk about tax strategies and things to think about from a tax perspective, obviously, in addition to the relief that's been offered. More generally, people, if they're thinking about getting money from to pay bills as they come due, I mean, obviously, we don't want them to, at this stage, to dig into their retirement accounts and their RSPs and RIFs and things like that. And I think the government sort of acknowledges that by, for instance, the change that they've made to the RIF minimums decreasing for 2020. Certainly TFSA is a source, non-registered investments, although there could be a tax cost to the extent that there was some gains realized. But of course, with the markets being down, there may be the reverse of losses being realized, and thinking about the ability to carry back losses, capital losses in the current year to recover any tax that's been paid in the last 3 years on capital gains that have been recorded on tax returns. There's potentially changes to prescribed rate loans, which is a strategy that we've often seen implemented to split income with other family members, or for those business owners that need to access cash on a short-term basis from their companies. That's a lower amount of taxable benefit or interest payment that's required to avoid that taxable benefit. So we expect it's quite possible that those loan rates could come down as early as July 1st. But in terms of the longer term, we're thinking more around the concept of an estate freeze. And for those that aren't familiar with that, this is a strategy, an estate planning or a tax strategy, whereby we take the future growth of a business and try to transfer that to the next generations that are working in the business. Typically, it's done on a tax-deferred basis, but the owners or the founders, the current shareholders, would have to retain the current value of the company just in shares that they take back, and those future growth shares would be transferred out to the next generations. So with the potentially depressed valuation in this downturn, the current value of the company may be lower, and therefore, in the hopes that the valuation eventually does bounce back, there's potential to transfer higher amounts to the next generations, which could result in some tax benefits in terms of some income spending benefits or savings, and some ultimate tax deferral by reducing the tax on death of the founders on the shares that they've retained in this transaction. So obviously there's lots to consider here. You still need to ensure there's sufficient wealth for you, but certainly there's flexibility within a strategy to share in some of that future growth. So it's somewhat complex, but if it's a strategy that you've been thinking about, this may be a time to consider implementing, but be certain to speak with your accountant and lawyer because of the complexities.
Thanks, John. And thank you to Leslie and John Panizia as well for your insights and important information today as we all try to navigate these unprecedented times. This brings us to the end of our time today. We'll be posting this webinar on bmoforwomen.com should you wish to access the information or share it. And thank you all for joining us for this important discussion. Stay well.